Hi there, Serial Trader here. I want to highlight an interesting trade setup here that I'm looking at. And we're looking at the price chart of GLD. And I'll also go back and forth to the gold futures chart as well, the GC chart. And I think we have a very textbook looking contracting triangle here. Now, I've intentionally left all the potential wave labels off this chart, as I just want to focus on this individual pattern and not worry about whether it's a wave 4 or what its overall context is in a larger wave count, because I think that kind of at times can distract from actually just viewing it as a individual pattern that presents a trade setup with a defined risk reward. So that's what I want to do in this video. So I just want to look at this purely as a trade setup, no bias whatsoever. Obviously gold has been in a strong uptrend, and this certainly appears to be a corrective pattern, like a continuation pattern that would suggest further upside once it resolves here. So in a typical contracting triangle, you have your A down, B up, C down, D up, E down, and every time the range keeps contracting, you make a lower high, then a higher low, then another lower high, then another higher low, then you finally break out and get that big thrust out of the triangle. Or if it's a bearish triangle, you break down and get the thrust down. But in this case, it certainly looks to be developing as a bullish triangle. Okay, so some targets here. Assuming that we have this E wave in place, which looks fairly solid at the moment. You see I've drawn this BD trend line. Looks like we're breaking out above that trend line. This is the 4-hour chart of GLD, by the way. So just a simple target. Do a reverse Fibonacci extension of this A wave, since that's the largest portion of the triangle. The 1.32 reverse fib gets us to 167, and the 2.0 gets us to 171. So, I mean, you could certainly exceed these targets, but that's a good initial level to look for. Let's say 167, 170-ish, something like that. And then, of course, you put your initial stop. If, say, you enter here, you put your initial stop below this E wave low, as it's labeled, so at 158.11. So let's just say stop at 158, target at 167 or higher, but 167's kind of the minimal target. And let's just bring up the, what was I going to throw up here? I was going to do the kind of risk-reward illustration there. Hang on. Long position. Okay. So let's just say we entered right here where it closed, and our stop is just here at that E wave low, and our initial target is up here at that 167 area. So risk reward ratio almost 2 to 1. Again, though, that's using the conservative projection. If we actually go up here to a very attainable level, our risk reward ratio gets to over 3 to 1. So I just wanted to show that. So it's a decent trade setup as far as risk reward ratio. It's certainly a good trade setup as far as probability of success. These contracting triangles usually respect the stop, and then they thrust out and you get a nice result. So I decided to throw that up there. So potentially around a 3 to 1 risk reward ratio if we do hit the upper target there, which is certainly possible. Now, there's also the possibility that this D wave is a little bit more time consuming, and this is actually an ABC up for D, and we'll have to come back one more time in E, but again, we would still be respecting this low at 157.80, which is only slightly lower than 158.11. So this is possible, but as it stands right now, there's no reason to go there unless it starts pulling back again. So what I'm thinking here is we already have the E wave in place, and we're starting this next impulse wave up. You'd be looking for something along these lines, nice impulsive thrust up, right? 5-wave sequence, trending sequence. Okay, so that's what I wanted to show there on GLD. Simple trade setup, nice contracting triangle. Now, just to look at it on the gold futures, essentially the exact same setup. This is a contracting triangle by the looks of it. A, B, C, D, E. Looks like we're beginning our thrust up again. if the D wave is developing a little bit more complexly, and this is ABC up for D, we still get a pullback in E to a higher low above this level. So in this case, if this happened, the low to be long against would be 1676, or in my more we'll call it preferred scenario, it has to respect this low at 1683. Again, very similar levels. So just to be safe, maybe throw your stop below that C wave. But same idea. Reverse fib of the A wave gives us some targets of 1835 to over 1900. So from a current level of 1728 or so, that's a nice setup. Another thing that gets me thinking that this E wave is complete. Now, if I go to the daily chart here on the futures, you won't see this on GLD because it doesn't reflect overnight moves, but the futures do. So if I go to a candlestick chart here in the futures, let me just zoom right in. You see we did a beautiful bullish engulfing candlestick on this most recent candle. Now this is just the overnight session being illustrated by the next candle. That'll obviously develop more tomorrow during the regular session. But this is a nice bullish engulfing candlestick. Close above the T line there. Looks like we're thrusting out the triangle with a nice candlestick buy signal. So that's really what makes me think that we have the E wave low in place already. But again, in either situation, we should respect this previous low, currently labeled as the C wave low. So that's 1676 on the gold futures. And on GLD, that level is 157.80. So those are your key levels to hold for a bullish position to try and capture this triangle thrust up. Anyway, that's all I really want to point out. Nice trade setup here on GLD. As far as the overall market's concerned, still waiting for it to show its hand. It certainly looks like it is vulnerable to a decline, but we're doing a deep retrace right now of that initial move down. So we'll have to see. If I go over here to the SPX chart, you can see we've done about a 61.8% retrace as of today. So this could still be our initial 5 waves down, and this is our initial 3-wave corrective bounce, and then we're finally going to tank. That's certainly possible as long as we hold that 29.54 high on SPX. Now you can see on the futures here, S&P mini futures, same idea. This is the 4-hour chart. We have this initial move down off the top from last week, and we're having our corrective bounce up. Now, as long as we hold below that key level on the futures, it's 29.65. This could be our initial move down, initial rally up to a lower high, and then finally we fall down with some sort of more powerful move. But again, until it actually starts breaking down and breaking out of this channel, it's anyone's guess how it actually resolves. I'm leaning towards it going down, obviously, as I explained in my last video there on the weekend. But if we take out the high, then that clouds what's going on, and I would have to turn neutral as opposed to bearish here. Certainly looks like it should go down, but until it actually does, we're just waiting and watching. Anyway, though, I just didn't want to spend too much time on that, because until the market makes a move beyond a key level, there's really no reason to talk about it. But yeah, definitely liking the setup here on gold, and hopefully you can do something with that. I'm currently long the GLD 162 calls expiring in a couple of weeks, so let's see how that goes. All right, Serial Trader signing off.